Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC readings, the form where we look at the best of the best value investment recommendations by the best value investors out there. Today we have Michigan Oil. I'm sorry, not Michigan, Misheng Oil. Ticker is 003650. Price at the point of filing is 71,201, whether that is a Korean currency. Before we get into it, let's quickly take a look at the numbers at the financials. We got a gross margin of 13, a net margin of 5.5. Interest coverage is almost at 200, so there's no problem with paying current liabilities, current debt. I mean, ROIC of 18.6, that is high, and EV to EBITDA at minus 0.34. Interesting. Negative EV to FCF PE ratio is 4.24. So it could be so one can consider it a cheap company. PB is 0.31. Okay. Let's dig further into it. We see I wouldn't really say revenue is increasing. I mean, now it is at the point when it was in where it was in 2010, but between that there were like some weird cycles. Same goes with operating free cash flow, free cash flow, and net income. It is quite cyclical, but they are paying a dividend, and they have a total of 170,166 million of cash, and just 2,471 of debt. So we are looking at a solid balance sheet. There's no problem there. A total stockholders' equity is 301,000 or 302,000, and total assets are 348,000 million. I'm sorry, obviously. And recently, since 2017, they have started buybacks, approximately at probably an average of 3% per year, but not in 2021. Okay. So that looks all quite good. I like what I see. Let's dive deeper. Let's get into the qualitative side. Let me first say this is not a recommendation, not advice. Please do your own diligence before investing into anything. And please write down in the comments below if you have invested, will invest, or why not into Misheng Oil. That would really interest me because I think this first looks at like a good company. I haven't dug deep yet. I will now read the qualitative perspective. Misheng makes lubricants for transport and industrial uses. The business economics are decent and it generates reliable, albeit lumpy cash flows. I think shares sell for something like 30% of its private market value. Okay. Misheng buys commodity raw materials and processes them into products ranging from slightly less commoditized by the barrel stuff to branded consumer by the quart packaged goods. Profits jump around and have ranged from 10 to 40 billion won pre-tax, and over the past 5 years, 40 billion-ish trailing. Ballpark best guess, average normalized operating profit is around 25 billion won or 17,000 per share. The business grows a bit using gross profit, otherwise you're tracking oil. And I'd guess it'll have a stable future. Maybe that's worth a 7x operating profit or roundabout 115,000 won per share. Misheng also has value on its balance sheet, approximately perhaps 90,000 won per share in theoretically separable assets, cash, fin assets, etc. Then they've got 30% of a car dealership group that's maybe worth another 20K per share pre-tax. So perhaps a private buyer could get comfortable buying this whole enchilada at 91 per share, BS, book per share, I guess. I don't know. Plus, book per share plus 21 per share for the dealer, plus 17 per share pre-tax, times 7x for the biz, equals 225,000 per share. As a sanity check, that's close to tangible book value. Shares trade around 71,000 per share. Currently, they trade at the point of making this video at 65,000 per share. Interesting. Yeah, enterprise value is negative, so we got more assets, more equity than the price of the whole business. Okay, let's find out why. Hopefully he writes about that. Um, Shares trade around 71,001 per share, so there is a some margin of safety and potential upside. 225 divided by 73 equals 3.1. Now, you and I can buy the whole thing at the existing market price. So, what's a share worth to a passive minority shareholder? Hard to say, but a recent capital allocation isn't that dreadful. You've got a 3.5% yield, seemingly paid dividends since listing in 89, and they've repurchased stock. Shares out down 12% in the past approximately 10 years, with a float down more. Buybacks would be mind blowingly accretive, but like this idea, are severely limited by liquidity. Severely, I'm sorry. I haven't heard anything bad about the people from local market participants. Severely limited by liquidity, to me, this amount of cash doesn't look like limited liquidity. Maybe I'm confusing something. Maybe I'm getting something wrong, but that sounds weird. I wonder what the assets are. If it's just oil, or probably not. What else there is? But it's a rather short write up, so I assume he doesn't write about that. Sadly, one would have to figure that out before investing. Okay, so Korean small cap at a small fraction of an approximately private market value. Is that interesting? Maybe. It could easily be dead money for a while, but I don't reckon there's a huge downside. Famous last words. And there could be a few ways for things to turn out well, including could trade at a less ludicrous discount to a higher fair value. Best guess, this is like bottom 2 percentile, obvious cheap for a non-distressed decent business in stable countries. I think there's good upside to being only bottom decile cheap. I would not hold this all the way to 100 C on the dollar. For example, the RE isn't too bad, and the PB is 35%. If they do an 8% RE and trade at 50% of book in 3 years, that's about a double with dividends. Could become thematically popular for some arbitrary reason for some short period. This seems to happen sometimes. You might logically argue this is just double counting the first bullet. Could appreciate in line with increased value. In the next 10 years, this thing maybe generates 150 to 250 billion won of free cash flow plus from the core business, plus the car dealership earnings. Wait, they have a car dealership? I wasn't I listening to myself before? They have car dealership. You mentioned that. Plus some interest on their other assets. That seems like a lot relative to a market cap of 110 billion won. Obviously, if you're turning over rocks, you'd really like to find the Hope Diamond, and this ain't that. But what should you do when you stumble upon the proverbial 30 cents on the dollar with nothing particularly wrong with it? Is that a consolation prize? And is there something to that old school, keep it simple, stupid, Moody's manual approach after all? Anyhow, I think this thing has a decent risk reward for a small position. Risks the Wild West components of investing in old economy, small cap Korea. Catalyst TBD. Now, he didn't write about that. I will tell you before investing, find out what the assets are. But other than that, this seems interesting. This seems really cheap. See you next time. Please write in the comments below if you will invest into it, have invested into it, or why not, and what you in general think of this company and this idea.